Ok- Hi guys, this is MJ Pip guys. Sorry there wasn't weekly analysis in last week because we have been working on the industry guys. And now as you can see, there was a little change that is from MJ FX or Forex to MJ Pips guys. So we have been a little bit busy on the industry guys, but meanwhile we are back guys, and this is gold. We are on gold guys. It's weekly analysis on gold. We are going to check what gold has done throughout last week recently. Then we are going to see what are we going to expect from gold. Okay, let's go on guys. I'm on daily time frame on gold. From what we have seen on gold concerning market structure, gold has been going bullish. Now if you see, gold has been going bullish. Gold has been buying throughout guys. In the recent time it has been buying, and this was our recent resistance zone, I mean support zone. This is our nearest and recent support zone, so let me mark it out. And we have seen that gold has been going bullish. So but what we have seen from gold, how gold has been behaving was that it will go up, it will go down a little, take this gap that is here, go up, go down a little, go up, down a little, go up. You see it went down again, took this gap that is here, that is a fair value gap, or for balance into the balance price. And on our, so now what we saw here was that we saw a rejection candle. Now the last close candle that we saw, that is this candle here for Friday, was that it was a bullish candle but a rejection candle. So we have to take note of this. Is very important because this is showing us that there is a possibility of gold of price going down a little bit. Don't forget, this week is telling us that the buyers push up, then sellers came with a serious momentum, they came with serious effect and pushed the market here and close around this zone here. So this is where the market opened. Buyers and sellers push it down again. It opened here, I mean, then the buyers, it reached this place, then buyers push it, sellers push it down at this side, then it closes. So if this is the opening, and this is where it reach, and this is where it pull and close. So now let's go to our 4 hours time frame. Let's see what gold has done, so that we'll see our chart color. You see now this in our 4 hours chart or time frame. Now this was the trend line, I think, that we have been working on recently. You see it, this is our trend line. We said that one thing that make a trend line is that a very strong trend line is that we have to see the first touch here, which you see it, the first touch here, we say we have to see at least 3 touches. So this is the first touch here, this is the second touch here, this one came and reacted even though it didn't touch, but I'm omitting this since it didn't touch properly, but it came to the zone and left. This fourth touch. So you see this has confirmed that this is a very good trend and this trend line is valid. We see even a fourth touch here, you see it, and here market came close to the trend line, it pulled up. So now this was a trend that we have been working on with. So let me get rid of this, so that to remove to so based on now, since this was a trend that we have been working with recently, and this was our trend, but we saw a little shift of trend because it came here, it didn't touch, then the market pull up. You see this, remember this zone that we mark here, this particular zone was our recent support zone, that is in the daily time frame. Don't forget this is very important because maybe you can expect price to retest this in the future time. So now what we saw price did was that price came and touched this zone, it pulled back, it came and break the zone and retested this particular zone. Now this zone, it retested this zone here, then price went up. So now we saw that price has formed another new trend line. Remember, we use our trend line to monitor our trend, so don't forget this is very important, especially if you are trading gold. So it means since this is a trend that we have seen, and this was our former trend, our major trend that we have been working on, and we saw a minor trend that price has formed. So now what did price did? Now based on what we saw on price pulled up, it came down to a particular zone here. This was the zone that price came to, this fair value gap. You see this fair value gap, price came to this fair value gap. Price came and took this gap that is right here. It took this gap and it came close to this former support zone. You see the former support zone, this zone here. Price came to close this former support zone, even though it didn't touch it. So you see it took this inefficiency. Remember what we said price has been doing in daily time frame? It comes, it pulled up, you see it pulled up, it pulled back, pull up, go down a little bit, pull up, go down a little bit, it keep on going. That's how gold has been moving. So we are not amazed the fact that we saw this pullback. So but at this zone, price did something that is very unique. It formed a rejection block here. This candle, we see it with massive rejection. It formed a rejection block now, showing us that price is still going up. Now this rejection block took us to this particular point, this high. Now this was the high that this rejection block took us to this particular high, this zone. And now this is our new high. It formed this new high. This is the high that price now is trading on. It has formed this new high, but before it formed this high, this was the other high that was currently in the market. But now price took this high, you see it took this high, price took this particular high, make another new high, then form this rejection candle. Now what is this candle? When you see this candle in market, it's telling us that price is about to go down. And when you see it around this zone, this rejection candle, guys, is very important. If you are trading gold, it's very important. Is candle patterns, they are very important if you are trading gold, guys, especially in 4 hours time frame. Because if you should see from this place now, this was this doji, this candle, rejection candle, this candle now was this rejection candle was what pulled up. This was the sign that we saw that we know that price is going up, especially with these two inefficiency. There is these two fair value gap. This was what pulled up. We saw another one here. It pulled price down, and we saw it after this. We saw confirmation of this inefficiency, two double candle. It took us massively up. Now from this place, when we saw this again, we knew that price is about to go up, and price went up massively and took this former high. This was the highest high that we had before. Then now price took it and formed another new high. Now after taking this high, we saw a rejection candle at this point. So now what is this rejection candle telling us? That price might, remember trading is a game of probability, so this rejection candle now is telling us price might go down. So now what are we going to do now? Now it's very simple. What we do now, since we saw this rejection candle, now we are going to anticipate where do we think that price this candle can push price and end there. So now the first thing that we are going to do is that we are going to remove our Fibonacci. So we are going to take this swing, this particular swing, and the highest swing, guys. So now on our Fibonacci level, we have two zones that we are going to take note of. The first zone is this, our minor retracement. The second zone is this, our 0.5 medium retracement, and this zone here 0.68. So now what this means is that we are going to expect price to retrace, that is to test one of these zones, these three zones, to serve as support. Now if this zone cannot hold price, we are expecting this zone to hold price. If this could not hold price, we are expecting the last one to hold price. And if this last one to not hold price, it means that there will be a bearish movement, either a short-term movement or a bearish long-term movement. So now let me get rid of this Fibonacci. So now these are the two zones that we have put. These are the three zones. I mean, let me change their colors to blue. Let me change their color since we have a lot of red here. Let me change their colors. Okay, now these are the three zones, and remember again, we have our trend line here that has not been broken yet. So now we have three zones. Now we have three things now to watch. The first one is our trend line. We are still going bullish right now. We are still bullish right now, even though we saw a sign of bearish. We saw a bearish sign now. We saw a bearish candle based on this rejection candle here, bearish rejection candle, but now that is on 4 hours time frame. Now this is our three zones, that will be the three zones of Fibonacci. This is our trend line. Our trend line is still telling us that we are going buy. We are still buy, guys. We are still buy now. Now we are on bullish. Remember, we say on market structure on bullish, we have higher high, higher low. We saw another higher high, we saw another higher low. So based on our market structure, we are still bullish. Don't forget, we are still bullish, but we are expecting a bearish movement. But before we can say that this bearish movement will hold, the first sign that we need to see is a break of market structure. Don't forget, this is very important. We remember our market structure still now is bullish because this is higher high, higher low. We have higher high, higher low. We have higher high. Then we form another higher low. We saw another higher high, then higher low. You see, there's not any violation of our market structure. Now, before we can say that there's any violation, we have to see this low first broke. You see this low that is here broken. That is the first sign that we can say that okay, there is a bearish movement. Even though we saw a candle sign here, chart candle pattern here, that we are going bearish, but it has not yet been confirmed, because remember, we follow the trend and the trend is our friend. But now we are just preparing to see if this bearish movement will occur or not. So now, based on what we have seen now, that is in our let me get rid of this, in our 4 hours time frame. So now we go on to the 1 hour. We're going to the 1 hour time frame, guys. Now in our 1 hour time frame, we saw candle form something like a chart pattern. We saw a chart pattern, even though it has not been equal, but a little bit of a chart pattern here. This chart pattern here is also a sign of reverse. After this chart pattern, now we saw also at this zone that this is one of the places that has held price. See, this zone has a little bit served as a support. This particular zone, you see it has served as a support, a little bit as a support. So let me change the color. So now, based on this, it means the only time that we are going to say that there is a bearish movement is when we see a break of this zone, because this has served as a support. When we see a break of this zone, once we see a break of this zone, we can expect a bearish movement. Once we see that this zone has been broken, this particular point, this support zone has been broken, that's when we are going to say that okay, there is a bearish movement. We're expecting a partial bearish movement, and this bearish movement might end at either, now say here, because mostly this the minor retracement level is not like that strong, but once we see a retracement at this point, or especially I prefer seeing retracement at this let me get rid of this. I prefer seeing retracement at this zone, the 0.5 or this zone, because at this 0.5 we are seeing a support zone. Also, there's a support zone here, and it's close to this old support zone also. So we saw this zone, and so I'm expecting, I prefer seeing a rejection block, a rejection at this zone, this particular point, or at this one, because you see, if at this point also there is another support zone, you see it here, there's another support zone. So I'm expecting that even if this price should go down, should stop here or should stop at this zone. If these two zones could not hold price, it means that price is coming to retest this particular trend line here, or is coming for this particular our major support zone. So, and this is what I'm expecting: this zone, this one, or this particular one. But for now, since our market structure is still valid, we can't say we are going bearish until we see a violation of this structure, this trend line and this structure. Once we see price make something like this, break here from something like this and keep on going, we're expecting price to come maybe at this zone, this first zone or second zone here, or third zone here, or this support zone. But for now, since price is still within our market, our structure is still respecting our structure and is still respecting our trend line, what are we going to do now? At this particular point now, in 1 hour time frame, we saw still another rejection candle. Price reacted to this particular support zone, and price rejected this trend line. That was the retest of this trend line. From this, we saw a little weak, a sign of trend is going bearish. Even though we saw inefficiency here, this fair value gap, we saw inefficiency, especially these two double inefficiency. There is a fair value gap at the left and the fair value gap at the right. You see this double inefficiency, a fair value gap at the left and a fair value gap at the right. And especially, you see, this was one of the zone that has this zone that have served a little bit as a resistance for price, this zone, because price has tested this zone a little. This zone, price has tested this zone. You see it, this zone 1, 2, 3, 4. But we don't need this zone for now. But let me get rid of this so that my chart will not be messy, guys. So especially at this true one. So I'm expecting, if price, based on this candles, for now we have to wait and see what price will do on Monday first, because we saw here there is an inefficiency that need to be filled, meaning that price might end up coming, even if that bearish movement may occur, price may end up coming here, filling this inefficiency, or this other block here that has been here, or retesting here maybe before the bearish movement. Or price may end up, since we are still within this market structure, guys, and we saw this rejection block, price may end up like creating a little consolidation here, a little manipulation here, maybe then price will end up still retesting this zone and still go up. So what we need to do is that, now what I will do here is very simple for me. I have to wait and see what price will do on Monday. Now, if what I'll wait and see is that, I'll wait and see first is if price is going to go up. How will I know that price is going to go up? Maybe price will end up doing two things. Maybe price will just create some little movement here, then come here and test this one, after taking this, then maybe price will end up coming back again to, once I see price break this zone. You see this zone, once I see price break this zone, guys, once, especially I see things like chart pattern, once I see price break this zone, guys, we are going down. This is when I'm expecting the bearish movement. So that's why any patience is needed, because this is a counter trading, it's against the trend. So we have to wait first. We need proper confirmation first before you trade this trade. You take this kind of counter trading, because it's a little bit risky trade. But without seeing proper confirmation that trend, price want to violate this bullish movement and go for a little bearish pullback before coming for maybe bullish movement, because on a long move, gold has always been bullish, guys. That's how gold mostly should behave. It's bullish, guys. Bullish, guys. Especially based on what has been going on with dollars and going on in USA. So most of our move now, most of gold move is bullish, 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 bullish now. But still, before we expect anything bearish, we have to see. That's why we have to see proper confirmation, guys. But if let me say now it's two way around. If price do not respect the bearish signs that we saw in the market, now what are we going to do now? Now it's very simple. What we are going to do here is very simple. Let me get rid of this. Once we see a retest of this zone, also again, once we see a retest of this particular zone, we see it, this support zone and this trend line, we see a retest of this zone, and we saw a sign of bullish movement again. Maybe we saw another sign of bullish chart pattern or any rejection candle around this zone, confirming that price is reacting to this zone. We go again, boom, guys. We go boom, guys. We go boom up, guys. So now these are the two moves that I'm expecting. So once I see price around this zone forming our chart pattern, don't forget we saw chart pattern or rejection candle, guys, around the zone. We are going up, guys. I'm going up, guys. Once I see price, this is what I'm going to over. So this is what I'm watching, guys. This is a massive move, 328 pips, guys. Giving 50 pips. So once I see making it 50, SL making it 50. Once I see price, remember what I said, once I see price making this, we go massively. Once I see price making this, now I'm taking this first take profit. This zone here, this fair value gap that we said I'm making, this is my first take profit. This is my first take profit, guys. This is the first take profit. I'm taking partial profit here, then I'm taking another profit here. So now this is what I'm expecting on price. But if remember, if we see price, we said that if price, we can go in here, or we can end up going in here also. Once we see the same thing happen here again, we can end up going here, or we can end up going in here. So but once we see price break here, form chart pattern at this zone, once we see price break here, it broke this place. Once we see a break of this particular zone, guys, this zone, once we see price break here, you see, once we see price break this here, show chart pattern or rejection candle at this zone, we are going down, guys. We are going down. This is the two way around. These two things I'm watching. These the two things I'm watching. So once we see price, at this, these are the two things I'm watching, guys. These are the two things I'm watching. Once I see a rejection candle, but remember, we still need to be careful on this trade. This is a divergence trade. We are going against the trend, so we have to make sure that this zone is broken first. It has to be broken. Once we see this support zone broken, and we saw a serious chart pattern, be it inverse head and shoulder, or a W pattern here, or maybe a clear rejection pattern here, bearish rejection here, it means that there's a rejection candle. That's when we are going down, expecting here. Now I'm taking this particular place as my first TP. This is my first TP. This is TP1. I'm taking here as TP1. I'm taking here as TP2. This zone, if here could not hold price, then we expect this zone, guys. We expect this zone. So if here could, this is my first TP, I'm turning this place to second TP, to TP2. I'm taking this place as TP2. Then I'm expecting this place also, guys. This place, as my main trend. So we are going out from this pen, but this is our first TP, this is our TP2, then this is our last TP. This is where we end our trend, because at this point anything that occur, guys, will go on break even at this point. Once we see price break, it will go on break even, because maybe price can end up touching this particular zone. But this is where I'm anticipating, guys. This is where I'm expecting, because I saw a massive support candle here. We have served as support, and we saw here also all this week has been supporting price recently. So, but this is my first TP, second TP, third TP. That's if I see price violate our market structure and our trend line and our market structure. So I'm expecting these Fibonacci zones to hold price, because our trend line has been broken, our market structural zone has been broken. Then, and we saw already here there's already an inducement here. There was a swap of liquidity. Also, is also a sign that price might go bearish. But remember, we are still being bullish. We have to see what price will do first. If we see the bullish sign still hold, we are going bullish, guys, to this particular zone here. So don't forget. Now these are the, let me even put this. If we see a sign of bullish here, remember what we said. If we see a price react bullish here, we are going massively here at this zone, massively. Once we see price react, we are going massively here. Or we see price maybe react at this particular zone, came and retested this zone with a serious candle pattern or chart pattern, we are going up again massively, taking here as our first TP, then here our second TP. That is what we are expecting for this week, guys. So I don't know, maybe there is, so this is our expectation for the week, guys. This is what we are anticipating for the week, guys, and it has also been very nice trading with you guys. And I don't know, maybe if there is any any question, or maybe some stuff that you have been troubling, it has been affecting you recently, especially on gold, guys, can drop it in the comment section. Just drop it there, so maybe we'll see how we are going. This is one of the ways that we build on videos, guys, based on some of the basic things that is disturbing you guys. So just stay tuned, guys.